come in on some of these consumer-related stories like autos and FMCG, because they actually put a very strong gear behind them in 2009.
Yeah, I'd actually agree with what you've been saying. I mean, Maruti with a 50% market share, everyone's launching, new and small cars. It's going to be under a lot of pressure. I think most investors are looking at maybe having more weightage towards the two-wheelers rather than four-wheelers this year, if you have to be in the auto sector at all, that is. I like the FMCG sector. I think it's not been a great performer in 2009, but we're looking at the earnings season coming up, and we're looking at sales growth of across the board of about 13 to 15%. And you've got companies like Colgate increasing prices, which is at the back end of December. So whilst they get a little bit of that in this year's results, or this quarter's results, the main price hike is going to start feeding through in the next quarter. So there's a lot of power in pricing power with some of the fast moving consumer goods companies. So I would be looking at Dabur and Colgate as a kind of mid-cap plays, and stick with ITC for the large cap. So if I was to kind of bet on consumer, I'd probably be in FMCG rather than autos at the moment.
From a tactical perspective, Andrew, what's the right way to approach this market? Do you say that there is still a leg of momentum left in global markets, and that kind of momentum, when it unleashes, will drive high beta sectors even higher, like metals? Or do you say, I'm uneasy about the headwinds and I want to have a more defensive tilt to my portfolio? Which is the right way to go into the first quarter of 2010?
Another great question. I mean, 2 days ago I would have said to you, we are kind of feeling more defensive, which is why FMCG, but I also would have put into their IT. But obviously, if the rupee is going to strengthen from here, that puts a bit of a damper on the sector. My gut feel tells me to be more defensive in the first quarter, first half. I think there's enough headwinds and uncertainties which will surprise more negatively than positively going forward. So I'd be more defensive. I'd probably have IT, FMCG. I'd actually be buyer of Bharti. I think the worst is there in the price now. So telecom in terms of being defensive as well. And look at some of the kind of longer term themes which will be playing out. Retailing is something that we're interested in as a long term theme, and certainly the insurance sector. Looking at companies where the insurance part of the market cap is of significant size, to change valuations as and when any listing or divestment happens in that sector.
Andrew, what about the other macro events? You mentioned the budget. This time around, would you put more expectation on it? I know last time you weren't a believer in the budget and what it might deliver.
Yeah, I mean, I'm looking again. I always look at the budget really for the, where the government policy is going to be going forward. Whilst obviously we'll be expecting the usual kind of favours given to all industries and tax rebates and so forth and so on, I'm really looking at what the government's going to do in terms of the big reform tickets, which we've all been awaiting. That would really be what I'm after. I mean, if you look at last year's budget, obviously we were disappointed, and then the government continued to talk up the disinvestment program, which they've actually kind of started to deliver on. So it's probably, whether it's the budget or whether it's after the budget, it's really what the government's going to do about the big ticket reforms, which is going to help this economy grow. Because without doubt, if we're going to get to 8 to 9% GDP growth, and some of the bottlenecks we saw, in terms of the economy and inflation in 2007 really have to be addressed, and that will need a lot of foreign direct investment to help that along the way. So I'd be looking at that type of environment in terms of the policy making, which will get me more excited going forward. But budget per se is, year after year, I think I tend to look at it less. It's great for the markets. We can all speculate on what we expect and then all be disappointed at the end of it.
How much probability would you attach to the market scaling its previous peak, Andrew, moving to a new high during the course of 2010, either in the first part or towards the fag end of it?
I'd be more towards the back end of it. It wouldn't surprise me at all. Our trading range for the Sensex, though, again, is 15 to 19,000 for this year. And, you know, that's, I think, the range that we'll see for most of it. But, you know, I've always said, you know, I've mentioned before, is that India, to my mind, has always been a back-end 2010, 2011 earnings story. And that's where I really believe the operational gearing of India will start to come through in terms of earnings. So, therefore, I would expect to see, you know, major upgrades to earnings forecasts going into the back end of 2010 and into 2011. So, you know, I could easily argue that the market being nearer to 25,000 than nearer to 15,000 at the back end of 2010.
Have you liked anything at all from the IPO pipeline, Andrew, or even from the follow-ons that are going to hit the market soon?
Well, at least, you know, again, listening to your channel the last few days, at least we're hearing management saying that they want to leave something on the table for investors. So that's an encouraging sign. And let's hope that continues and management prevails over some of the merchant bankers. You know, I think in terms of the IPOs, it really depends on which company and and really the valuations which are coming out. So, you know, it's been good that we've seen some listings which have made people money. I hope that continues, but I think you have to look at each individual company and the management and their prospects as they come through.
Drew, one final word from you then on where you see the mid-caps ending up this year. Do you think that would be the space to back? I mean, it's a broad brush definition for them, but generally, is there more value or more price appreciation there, you sense?
There's certainly more value. I mean, you know, the mid-caps were trading at half the PEs in most cases of the main index. Again, you know, it is unfortunately very stock specific. I think you have to look at which sectors you like going forward, and therefore try and pick some of those companies where you believe the management can grow their own company into a large major player going forward. So, you know, I wouldn't, you know, it's difficult to broad brush and say all mid-caps are cheap. Some of them will always remain cheap because of certain reasons, whether that's to do with management or how the company's positioned. But certainly, you know, you've always got to look for those new winners emerging, and particularly in new sectors. So I would say, like, you know, education, health, insurance, all of these areas will be, you know, and retailing will be the areas to be looking at in the next few quarters. And I think that's where a lot of foreign institutional investors will be actually pitching their tents in terms of looking at value.
Andrew, thanks very much as always for joining in. Have a good 2010.